What's up, everybody? And there are some investments in your car that eat up all of your money, and then there are some investments, real estate, that put more money in your pocket. The reason why you invest your money is so you can be financially free and do the things that you want without having to worry about money. But all investments don't work the same. If you really never want to have to worry about money again, you need 3 different types of investments. You need an investment that's going to pay you with income, you need an investment that's going to give you growth of your wealth, and then you need an investment that's going to protect your money. So what I want to do today is go over the 3 investments that you need to make, that way you don't have to worry about money ever again. Starting with number 1, which is investing in real estate for income. Traditionally, when people talk about making a passive investment for income, they talk about investing their money into the stock market, into a dividend-paying company. So you look for a company like McDonald's that's been paying a good dividend, you invest your money into McDonald's, and then every quarter McDonald's is going to give you a dividend check. But I prefer real estate rental income, and I'm going to show you why real estate is the best place to generate passive cash flow. The way it works is you can go out and buy a property. This can be a house, this can be an apartment building, this can be a mixed-use building. You go out and you buy this property, this building, and then you're going to lease it out to somebody else who's going to use your building. In this case, we'll use a house. Now, I'm going to lease it out to this nice person with a mustache with his wife who has a braid, or as we like to call it in my native language Punjabi, a good. This nice couple live in my home. Now, in exchange for them living in my home and using my home, they're going to pay me $1,500 a month every single month for living in this property. I don't have to do any work after they move into the property because now I already own the asset. I'll give you another example of this. The Minority Mindset Company's office right here is 2 floors, and I pay $4,300 a month to lease our office space. So this is money going to the landlord. I don't really see the landlord ever, but I give him a check every single month. This is money that he uses to pay the mortgage for this building and put some money in his pocket every single month. The reason why I say real estate is the best place to generate this type of passive cash flow is because, for one, if you do it right, you're going to be able to rent it out to somebody else, and this rent that you get is going to cover your expenses, your taxes, your insurance, your maintenance, your management fees, and it's going to put some money in your pocket every single month. And if you do it right, you can hire a property management company to deal with all the day-to-day work. So if something goes wrong, if the electricity stops working in this office, I can just call up the property manager, and then the property manager will take care of the issue, and the landlord won't even hear about it. So I like real estate because of the cash flow that you can get, and it can be pretty passive. I'll explain why I say pretty passive in just a second. The second reason why I like real estate is because of the tax breaks that you get as a real estate investor. Now, although I am a licensed attorney, I'm not your attorney, so if you have specific tax questions, talk to a tax professional in your area. But the IRS rulebook gives real estate investors some of the biggest and best tax breaks that our tax code has to offer. I'll show you what I mean. If I can rent out this home for $1,500 a month, and let's assume for the sake of this example that my expenses are $1,000 a month to own this property, that's my taxes, my insurance, my maintenance fees, my management fees, and my mortgage is $1,000 a month. This means that every single month I get to put $500 worth of profit into my pocket. This is the money that I get to put in my pocket, which means every year I'm putting $6,000 into my pocket. Now, generally, when you make $6,000, you have to pay taxes on $6,000. But because this is real estate, you get a little bit of a tax break. You get to tell the IRS, hey, I made $6,000, this is the money that I put into my pocket, but because my property is 1 year older, I deserve a tax break. Going back to this home, let's assume that when you bought this home, it was $20,000 for the land and $150,000 for the actual house. Now you will get to tell the IRS that because this property that I bought is 1 year older, I deserve a $5,500 tax break, which means you put $6,000 in your pocket. This is the money that's in your bank account, but you only have to pay taxes on $500. This reduces your taxable income and your tax rate because your income is less. This is the first reason why wealthy people love investing their money in real estate, because you can make a ton of money and pay next to nothing in taxes legally, because the tax code says so. The second reason why wealthy people love investing in real estate for the tax breaks is because when you buy this home for $170,000 and over time it grows in value and you sell it for $1.7 million, normally you would have to pay taxes on the gain. But real estate gives you another exception called a 1031 exchange, also known as a like-kind exchange. This allows you to sell your property, take that money, buy a bigger property, and defer paying taxes. You can keep doing this again and again, rolling into bigger properties without paying taxes today, as long as you follow the rules. Talk to a tax professional to make sure you're doing this correctly. The key here is you have to buy real estate to rent out, not to live in yourself. This has to be an investment, and you have to understand your market. I like residential real estate because people will always need a roof over their head. Retail and office real estate can change with technology and work-from-home trends, but people will always need housing. When I buy real estate, I don't care about what the property will be worth next year. I only care about cash flow. I look for around a 7% cash-on-cash return. That means for every dollar I invest, I want to make 7 cents in positive cash flow every year. If I invest $100,000, I want to make $7,000 a year in profit. Property values crash? Cool. I'll buy more. My goal here is cash flow. Now, number 2 is investing in businesses for growth. Real estate is about income. Businesses and stocks are about growth. The more value a company creates, the more money it can make. You can invest in businesses in 3 main ways: publicly traded stocks, startups, or your own business. Stocks are the least risky. Startups are riskier with higher potential reward, and your own business can be the most demanding. When you invest in businesses, you're buying equity. Equity means ownership. This is how wealth is built in our system. In a capitalist society, you can make money from your labor or from your capital. Wealthy people use their labor to create capital, then invest that capital into equity so their money works for them. You can invest in individual stocks if you like researching companies, or you can invest in ETFs to get exposure to many companies at once. I personally do both. I invest passively into ETFs and actively into individual companies when I find good prices. Over time, I'm just trying to build more and more equity. Startups are higher risk but higher reward. If you find the next big company early, the returns can be huge. But many startups fail, so you have to understand that risk. Investing in your own business can be powerful, but entrepreneurship is hard. It's long hours, discipline, and sacrifice. Don't buy into the fantasy of working a few hours a week. The goal with growth investing is to take $1,000 and turn it into $10,000 or more over time. Then you can take that growth and put it into real estate to create more income. That's how you stack growth into cash flow. Number 3 is investing in real money for protection. This is your hedge. If the dollar loses value, if the economy struggles, if businesses and real estate take a hit, you want something to protect your purchasing power. That's why I own physical gold. Gold has been used as real money for centuries around the world. I also own Bitcoin. I buy Bitcoin on a dollar-cost averaging system. Bitcoin has potential to be digital gold, but it's still volatile and speculative. Gold is my protection asset. Bitcoin is a mix of protection and growth. If the worst-case scenario ever happened and I had to pick up and leave, I could take my gold with me and convert it anywhere in the world. So to recap, real estate for income, businesses and stocks for growth, and real money like gold and Bitcoin for protection. Build all three, and you won't have to worry about money the same way ever again. If you enjoyed this video, make sure you hit the like button, subscribe, and check out the free class linked below on how to make your first real estate investment. As always, keep hustling.